Worldwide markets this week. Can we now see how tariffs resolve? Trump puts big pharma in the spotlight. Lewis trading update is just wildness. Cogra M3 versus Baldwin results. Boxer results and a 7% increase in free cash flow from Anglo Gold Ashanti. This is Worldwide Markets, episode 630 for 14 May. I'm recording Tuesday afternoon, and I, of course, am Simon Brown. Worldwide Markets, powered by Standard Bank Global Markets and Shift, the global money app, your go-to for travel, shopping, payments, and investments in the palm of your hand, all at the cheapest forex rates. Thanks to Standard Bank and Shift for sponsoring this show. Remember, Shift now also has JSE shares. So let's start with tariffs, and let's go all the way back, I suppose, to the 20th of January. Trump gets sworn in. What we see is almost immediately he puts tariffs against Mexico and Canada. He almost immediately folds and walks them back. We then get some China tariffs. We then get the Liberation Day on the 2nd of April. What spooked the market is not that the market wasn't expecting tariffs. Trump had been talking around that the entire election process, between the election and inauguration, same story. It was the level of the tariffs that absolutely spooked the market, really did give them a giant fright. And that was then walked back. A week later, we got 90 days. Well, everyone got 90 days except China. And those 90 days were, okay, tariffs are going to be 10%. For everyone, China was 145%. China had done reciprocal tariffs of 125%. Then was it last week, there was some tariff deal with the UK. The UK was a little bit surprising because the UK is actually a net importer of American products, but essentially it took much of the UK down to the 10%. There are some carve-outs, there's some deals. They're going to buy 10 billion of Boeing airplanes. So there's some bits and pieces happening there. And now the China deal. And the China is quite simple. Both parties are reducing tariffs by 115%, which means China still has their 10% tariff on American goods. Again, there are some carve-outs. There's also some restrictions. For example, China has put restrictions on some rare earth minerals, which is sort of a part of the tariff process. And American tariffs on China dropped to 30%. Of course, there was already 24% on China, and as I understand, that 30 is now on top of the 24. So China is effectively seeing a 54% tariff on goods into America and American goods 10% into China. There are T's and C's. There are carve-outs, there are restrictions on high-end NVIDIA chips, all of that there. But I think two things. This deal with China is, again, 90 days, the same as the UK. These are not deals. These are talks about talks or talks about deals. They will happen in time, and we'll see how it goes. I mean, we are now 30 plus days into I'm trying to think, 34 days into the 90-day pausing, and all we have really is the UK. There's a lot more to go. I think what we're going to see, and T's and C's here, and let's park China aside for a moment. I think what we're going to see with the rest of the world is broadly 10% tariff. I think with trading partners who are important to the US, we will see 10% tariffs. Trump is currently in Saudi Arabia. They're going to get their 10%. The EU will get their 10%. Mexico and Canada will get them. The UK got them. South Africa, probably not. We're just not, Trump doesn't like us. So we're not going to get it. Vietnam is probably going to get 10% because, make no mistake, the Nike and the like all went rushing off to Trump and said, whoa, what are you doing here? So I think how this probably plays out is that sort of more favored nations get 10%. The rest of us probably get random numbers of around maybe 20 or 30% or there's about. And China ends up with a lot of tariffs. But probably at around about these sort of levels. Now, I mean, a 54% tariff is fundamentally terrifying. But last week it was 169% tariff. So it does make China a tradable, put it that way. If you're importing something from China, 54% absolutely hurts. It changes your margins, it changes your process. You're probably looking to move supply chains, but it's workable. 169% was never workable. It absolutely wasn't workable. So China's a special case. I think the negotiations there are going to take quite some time, and there's going to be lots of that you must buy some airplanes and we will buy some, I don't know, this, that, and all the rest type of stuff going in there. As I say, there will be lots of carve-outs, cell phones, computers, chips, etc. coming from China. America's going to be trying to push steel to them. China's not going to take their steel. They've got far too much as it is already. Vehicles will probably remain highly tariffed, but I think that's how we can see it playing out. 3 levels. Favored nations, 10%. Less favored nations, 20, 25, 30%. China, probably a whole lot higher. What has been completely abandoned is the idea that there will be production in America, completely abandoned, that they're going to make so much money from tariffs. This is now how it's kind of going to settle. And what does that mean? Well, what it does mean is that the end of the world that everyone was perhaps worried about and recessions and the like, I think those likelihoods are significantly fading. Was it JP Morgan who did have a recession likelihood at 65? They're now down to 25%. We can see S&P is not yet back to those levels sort of February when the first set of tariffs were being thrown around, and April, of course, when we absolutely lost it. But there's been a significant bounce back. We're going to see similar in the NASDAQ. And let's be clear, this is inflationary, although US inflation just came out 2.3%. That would have been April inflation. It is absolutely inflationary. It is moderate for gold. Gold right now is losing some of its shine. I've been expecting that for a while. And for equities, I mean, it is going to hurt. Even if, let's say, Vietnam gets 10%, that basically puts a cost on Nike of 10% on all of the goods they're bringing in. Can they pass that on to consumers? Sure, some of it. Can they squeeze some suppliers? Yeah. Can they take a bit of margin squeeze? Yeah. So say 3% into each bucket, 3 1/3, and kind of everything's okay. It does still disrupt. But the key point, there's 2 key points here. One is the uncertainty remains. We don't know what's going to be next from President Trump. And I think the second issue, particularly in the geopolitical space, this is not about uncertainty. There is just no more trust left. I mean, that is absolutely clear. And here's one thing I'm looking at, which is the US 10-year, which has actually been ticking higher. It's at 4.462% as I'm recording this. And that at 4.5 is what totally spooked Trump back on 9 April when he rolled it all back and said, no, we'll pause for 90 days, just 10% for everyone. Why is that playing out? I think it's because folks are saying, well, hang on a sec. It looks like this tariff thing is not a worst case scenario. It's not great. It's not good for global GDP, inflation, interest rates, and all the rest. But it's not the end of the world. We can kind of manage this more or less. So we don't need that security of US 10-year, perhaps. Folks are going into good old-fashioned equities and the like. And gold is pulling back, although I got to say, gold is pulling back. But there's a sense of, or maybe it's just consolidating. I mean, there does just seem to be some sort of consolidation happening from around about the 3,200 up to maybe 33 and some change, currently 32.43 on my screens. We are seeing some consolidation. If that breaks, we're back at around the 3,000. That's not stressing me, but at the moment, it does look, a big day in the US on Monday night, 4.25 on the NASDAQ, 2.25 on the S&P. Folks are piling back into the US equities, as they're saying them, that they, as I say, it's not over, but we've got a sense of how it plays, and perhaps it's going to be less ugly. We have some events coming up. We're continuing our Meet the Managers, actively managed certificates. We've got one on the 15th and another one on the 22nd of May, webcast only 11:30. The last one was up last week. And I got to say, I've spent a fair bit of time digging around these actively managed certificates, the AMCs, and even I managed to learn some. We've also got a Standard Bank Power Hour, 15 May, trading as a side hustle, know your derivatives. That is this week, Thursday this week. It's 5:30. either at Rosebank, Standard Bank head office in Johannesburg, or webcast. We've done a fair bit on trading as a side hustle, psychology, trading 101. We had Mishima Gama, and she did a whole bunch on the technical analysis and the charts. Now we're going into the derivatives. How do they work? How do you manage the extra risk? And how do you understand which one, what the difference is, and why you would want perhaps one and not the other? JustOneLap.com/events for more information and booking. So the other thing that happened on Monday was Trump essentially going after Big Pharma. And what he was saying there is that Pharma is cheating Americans. There is far too much being paid for drugs in America. It's a whole lot cheaper in other countries. Now, I mean, he's not wrong about that, but that's because other countries subsidize their healthcare. America does not. There's a lot of middle people involved. I use the XLV ETF, which is essentially a healthcare ETF in the US. And I mean, it actually went up on Monday. It had come down a bit. It's off the highs. The highs are 156. It's down at 136. It's certainly off the highs. Essentially what Trump is proposing, and when we see the details, and I need to check into some of these. I mean, Kamala Harris proposed this in last year in her campaign, was price controls. Now, I don't know that price controls are legal in America. I suppose you could pass a law and make it legal, but let's be clear, executive orders are not laws. They're instructing agencies to do things, but they're not law. So it would have to get through the Congress, and the Republican Party control both Senate and the House, so that should be possible. What Trump has now said is they must lower prices in 30 days. And as soon as that clarity came through, there was actually a fair bit of a bounce in the pharma stocks in America and globally as well, in that they're given another 30 days, although this time only 30 rather than 90. And if it doesn't happen, then he's going to, I'm not sure. I don't know. I mean, by all accounts, drugs in America are very expensive, and certainly a lot more expensive than in other markets. As I said, that's because many of the other markets have healthcare as one of the government provisions rather than just completely free market. But it's also just how the industry works in America. Lots of middle people, lots of central buying, lots of craziness and messiness. Can he do it? I don't know. The key thing for me is I don't like investing in healthcare as a rule. I always worry about government regulation. And to be clear, I was worried about government regulation coming out of South Africa or Europe or India or something like that. Well, we got it out of America. But I've always said that the problem is really, really quite simple, is healthcare is forever and a day. Inflation is higher than normal inflation. That's a drag upwards. Governments don't like it. In many cases, governments are paying those bills. And in many cases, governments are saying, hang on a second, who's making all the money here? And, do you want to make profits or do we let people die is kind of the question. So I've pretty much stayed away. I mean, I obviously have some in some of the various different ETFs that I hold, but I don't hold any specific ETFs in the healthcare space. I've always just looked at it and thought to myself, that is not a space I am particularly interested in playing. We are in earnings season locally, and stuff is happening left, right, and center. And one that wasn't even earnings, it was just a trading update. Lewis. So they expect earnings per share, headline earnings per share, 55 to 65% higher. That saw the stock up on Monday about some 15, 16%. After that run, the stock is on an 8 PE and a 7.8 dividend yield. This stock is still cheap. Now, there's a bunch I want to look at here. The first is, Lewis is essentially a bank that sells furniture, right? The furniture is just to generate the loans. What management has been doing over the last little bit with Lewis is they have been increasing the size of their loan book. And a lot of folks are like, yo, that's scary. Yes, it does lead to increased bad debts. But if you can increase the profits faster than the bad debts, well, you're making increased profits. And that's what Lewis seems to have done. They pay a very, very good dividend. They also buy back shares. What are we looking at? That's not a very long chart. Let's go to a longer chart. 10 years ago, there was around 90 million shares. Now there's around 49 million shares. They've almost halved the number, or 44% down in the number of shares issued. And that's what they do with their profits, as well as giant dividends. This is a great stock. I was chatting with Alex Dace on my show this morning, MoneyWeb Now, and he's like, yeah, in fact, he also picked it on his stock pick on Monday evening. And this is a great business, and it still has some way to go. Boxer had their maiden results out on Monday. And the listing's been good, make no mistake about that. What we do have is the headline earnings are modest. I mean, absolutely they are. And the reason for this is quite simply, there's a lot of new shares that come out into issue, and that then takes some of the shine off it. So certainly some pain there, but they're looking to maintain single-digit like-for-like sales growth over the next couple of years. They want to add 25 superstores and 35 liquor stores per year over the next couple of years, and they had a operating margin of 5.5. If you do 52 versus 52 weeks, because there's an extra week in this year, it was 5.4. That is ShopRite type levels. So we have a stock that is on a PE of around 16 times. We'll get more dividend details as time comes through. Certainly they will be paying a dividend. And I think the stock is looking fairly decent. I think it's probably fairly priced. And if they can do the growth that they're talking about, I think it can probably do better. It has two holds, two buys and a strong buy. Average target price is 76.66. High is 85, low is 65, and the stock is 64.77 at Monday's close. So the market, with the analysts are saying it should be a whole lot cheaper. For me personally, I hold ShopRite, and if you're holding ShopRite and you got the best of breed, I'm not sure I'm going to do any better in Boxer. Some folks are holding Pick and Pay to get to Boxer. I am not sure about that either. Pick and Pay has some real challenges, and I got to say, I think that no. If you like Boxer, buy Boxer. AngloGold Ashanti put a trading update on Friday. Free cash flow up 7-fold. New dividend policy, they'll pay 12.5 US cents per quarter as a minimum. I don't like those. What they're basically saying is, we promised, but one day gold's going to be below the all-in sustained cost, and now you can't pay the dividend, and now you broke your promise. Just I don't know. Anyway, they're going to give us 50 cents a year, paid quarterly, US cents, which in of itself is quite nice. What's that? About $9 a year, which gives us at the moment about 1.33%, 1.5% dividend yield. And then half of free cash flow will be returned to investors. They saw production up about 26%, but that was the Egyptian acquisition. Their all-in sustained cost around $1,600, even with gold under pressure, $3,200. They are making $1,600 per ounce. This was for Q1, however, and at that point, gold hadn't yet gone completely crazy. So they're only making more money, even if gold does come off a bit. But it does mean that we're going to start seeing massive dividend payments. The share price is under pressure. It's come down a bit, and certainly it went up a bit on Friday after the announcement, and then Monday at one point it was down 10%. We had a strong rand, and coupled with that, a weak gold price. Rand's weakened out to around 18.33. That on the back of stronger dollar, but the gold miners are now at that point in time where they print money. What are they doing with it? Share buybacks? Yeah. Dividends? Love me some of those. And AngloGold Ashanti is the one that I hold. They could go and do acquisitions. Careful with those. And they could go and do green or brownfields projects. There's very little of that happening. Last one is Calgro M3 versus Baldwin. I hold Calgro. I almost said both. I hold Calgro M3. Different markets. Calgro sub-million. Baldwin, I think their cheapest is now probably 1.1 million, and they go up plus 3 million at some places. Baldwin's got some nice annuity business, which is now about 8% of revenue. Baldwin's got the memorial parks, which now covers head office at about 100 million a year for them in that space. They both were under a bit of pressure, and Calgro sold a lot less units. And the simple math there is they were worried about the potential violence around the election. They'd seen it before. They'd had invasions on properties. I think it was the 2019 election, national elections. And so they really, really pulled back. They are seeing banks lending. They are seeing activity. Calgro is moving away from government subsidy housing more to open market, but still at the cheap end, that's 800,000 Rand properties. They've both got pipelines that are tens of thousands long. I like housing. Absolutely. I think housing is hugely important. I like how both do it. I actually met a young couple on the weekend who's staying one of the newer Baldwin products. They really like it. They say it's absolutely great. There's lots of features. It all works. It's got the restaurant. It's got the gym. They did say, you know what, there could be a few more pieces of equipment in the gym. Sure, I mean, at peak time, that's always the case. But I like both. I hold Calgro because it's broken higher. Baldwin hasn't. And we'll see what happens with Baldwin at some point. Do we start to get a break higher on Baldwin? And then I think it might be worth starting to get interesting at the same time. Worldwide Markets, powered by Standard Bank Global Markets and Shift, the Global Money app, your go-to for travel, shopping, payments, and investments in the palm of your hand, all at the cheapest Forex rates. As always, a huge thanks to Standard Bank and Shift for sponsoring the show. My name is Simon. We will leave it there. I'll be back again next week. Until then, look after yourself. And if you can, look after somebody else as well. Cheers all.